All right. So what's going on?
How's the weather?
It's funny you mentioned that because a lot of times when, I'm talking to someone, I might say like, and I think we all do this, right? How are you? What's going on? I don't know. It just kind of seems par for the course. Also, like when I meet someone new, oh, what do you do for work? I'm realizing that there's kind of other ways to ask someone some things where it's just more engaging and you actually get a response.
It's less
back.
awkward.
It is less awkward, right?
Small talk has become an art.
I agree.
Even like I'm looking at stuff that they send home from school, even from my daughter's daycare.
Okay.
They're like, don't just ask, how was your day? Ask, what did you do today? What was exciting?
Yes.
What,
yes.
What
Are you working on anything
made
new?
You laugh?
Right. I do. I have a college kid and a high school kid, and it'd be great to hear more than little mumbling answers that we get.
Yeah.
But
school was fine, Dad.
Yeah. I mean, what do you, is there anything interesting that you're working on, right? Something like that. That's some way that you're going to spurn a deeper insight with somebody, right? And make a connection, because that's kind of what we're looking to do, I think, in real estate and in mortgage and in any kind of sales job, and really anything, is you're looking to try and relate to somebody and make them feel comfortable with you and be a little bit different and engaging, especially in the beginning, because your first 5, 7, 10 seconds is an impression. And when someone talks to you, when someone talks to me, I'd like them to just feel a little bit maybe different than if they're talking to somebody else.
Yeah.
Be memorable.
Well, and I mean, that's why like we were joking off, starting this off, how's it going? How's the weather? But that's what small talk is today.
It is. And it serves a purpose. And it's better than no talk.
For sure. And there's a lot of that too.
Right.
You look around a room and everyone's sitting on their phone.
Well, I say this all the time. I say this, to my kids too. I'm like, listen, you need to be a little interesting. And in order to be interesting, you need to be a little bit interested. And, I'm like, because the kids don't, listen, let's say what it is. A lot of us, this is a generalization, but a lot of us don't read like we used to because we're busy and we're on our phones, whatever. But, I said, like, you got to read a book or two just because in case you're at, your girlfriend's or boyfriend's dining room table and the dad asks you, what are you interested in? You got to say like, oh, I just read this book or I saw this movie or whatever. So I say just, do things that you're interested in, but you need to be a little bit interested as well.
I think that's a really good point. And like, I'm thinking about that because we just did a book exchange at one of my networking groups.
Okay.
And I'm like, wait, book? What's that? I don't read anymore. It's just a different time.
Yeah.
I listen to audiobooks. It's reading. It's just I'm not picking up a book and reading.
The thing I found about reading recently, because I started getting back into it, right? And for me, when I'm reading, it shuts my mind down because I'm not thinking about anything else, right? So it's almost like a meditation in some ways because I'm reading and I can't have other thoughts like, oh, I got to call that person back or I got to get back, whatever. And I'm able to kind of clear my mind when I read. So that's why
Can you actually shut down and do that when you're reading?
I can. Yes.
That's interesting. I still I feel like when I'm reading, I'm almost thinking about other stuff more. Well, I don't know. It's weird.
You have to, because the thoughts will try to come in, but you have to practice it. It's not going to be overnight. So for a while, and I got to get back into this, I started reading first thing in the morning, right? Even 10 or 15 pages, right? Even for 5 or 10 minutes, just because in the morning, sometimes our brains start going. And I'm like, let's just calm down. The day is going to unfold. The day is going to organize. And by reading a little bit in the morning, A, I'm getting it in. And B, I'm not starting my day out like in kind of like a hyper, let's get going stage, which a lot of us in, pressure industries like we're in, you have some coffee and next thing you know, the phone's ringing and you're getting emails and you kind of start getting into this like zone. But I believe there's ways to approach your day without kind of having your nervous system like, on overdrive.
Right.
And I feel like in the morning is a good time to kind of just, chill things out a bit. So that's been
take a step back, get rid of the
dopamine
addiction to the phone and be interested.
Yeah. Because there's a lot going on in what we do, right?
For sure.
We were talking about it, offline and we talk about this a lot. I think something that we're seeing out there is really the median age of a first-time home buyer, right? Because
well, hold that thought for a second.
Okay.
because I feel like we should probably do the intro for the
Yeah,
podcast.
sure.
So,
Why not?
Well, since we're talking about interesting and being interested, welcome to Unlocking the Windy City podcast. I'm Justin Greenberg, your host of Windy City Unlocked. And I'm here with my good friend and go-to lender, our guest today, Jorden Brok with Revolution Mortgage. So this podcast is all about real estate, real life, the city of Chicago, and, life. Stuff going on. So if you're interested, as we were talking about, subscribe, like the podcast, follow us on social media, and, check in for what's next.
I appreciate you having me. Happy to be here.
Yeah.
And lots going on with a lot of things, but I think based on what we do and what we've seen, right? We both have been in the industry for a long period of time. There's a lot of opportunities, right? Even though the market's been a little bit strange, right, over the last couple of years, it's actually behaving rationally, is the way I kind of see it, right?
Yeah, it's different.
It's behaving
At
rationally.
least for me.
Yeah.
I've never seen like a normal rational market.
Right. It's
in
doing
my career.
Right. And everyone's like, oh, it's there's not a lot of inventory. Well, yeah, that makes sense, right? Because there's a lot of people with really good rates and they're not moving as much. And we're having some other things with the median age of a first-time home buyer. That is starting to really increase. And I think you know what it is, but I'm going to say, do you know what the median age of a first-time home buyer is?
I know what it is. Our viewers might not.
Okay.
But
well,
it's
you want to say it?
Sure. I mean, 40 years old.
It's 40 years old now, right? That's nationally. I think maybe locally here in Chicago, it might be a little bit higher potentially, right? So 10 years ago, it was 31. So something's happened over the last 10 years where it's gone from 31 to 40. So what do you think's going on with that generation?
Well, it depends what you're looking at. Are you following the national headlines? Because if you watch the national headlines, housing affordability is out of control.
Sure.
So if that's what you're looking at, that's what the reason is.
Yeah.
But I think locally, I think it's just a shift in mindset. I don't think home ownership is as important to young people as it used to be.
Yeah.
I think a lot of people saw what their parents went through during the Great Recession, and people were losing their homes, and they don't want to have that same feeling. They saw what their parents went through. It was hard.
I get it. I think and I totally appreciate that, and you're right. I mean, that was a tough time. If you were in the industry back then, that was a very scary time. We recovered, right? Mm-hmm. Things wound up working out. And, it's almost like you have to have that mindset of like, things are going to work out. If you have a dystopian view about the markets, about the stock market, about real estate, about everything, then you might kind of throw in the towel and be like, oh, it's so crazy out there. I'll just deal with it later. But I feel like, our generation, I'm on the higher side of our generation, but, when we got out of school, it was work, save, go out, have fun, but like maybe not on a Tuesday or Wednesday night, don't spend money at restaurants, so cook at home, and try and save as much money to buy your first place as soon as possible.
Right.
I mean, I was in the industry even at 24, 25 when I first started, and when I was talking to clients, I hadn't owned a home yet, right? Because I was 24, 25, and I still felt like I should probably own a home as I'm talking about mortgages.
Right.
I wound up buying my first home at 26, and now the median age is a lot higher than that. I think some things are different, though. I mean, some of these rental buildings have crazy amenities.
Well, and that's part of it, too. That's a big part of it, is you have a lifestyle. You can live in a rental building where you have a golf simulator, you have a bar, you have a pool and a hot tub and a workout facility. And why would you go to a single family home where now all of a sudden you have to pay for all those things? But I think what people don't realize with that is you're already paying for it. You're paying $4,000 a month in rent for a 2-bedroom, 2-bath apartment when you could own a home for $3,000, $3,200.
That's exactly right. I mean, a lot of people, if they actually see the numbers and actually see what the rent they're paying, what that would look like in terms of a mortgage, and that mortgage could, including association fees if they're buying a condo, homeowners insurance, and real estate taxes, a lot of times we'll see that the net effect of owning the home on a monthly basis is actually lower than rent, because on a mortgage, you get to deduct a portion of the interest, obviously consult your accountant based on your tax brackets and things like that. And you're also paying some principal when you're paying down your loan, and that's not really considered a cost.
Right.
So when you factor those two things in, the tax deduction potential and paying the principal down, a lot of times we'll see the mortgage actually be lower than the rent. And it's just showing people the numbers and then having them make the logical decisions that they need to make, right? What's best for them. Timing is important. You shouldn't just buy just because you're supposed to. You should do it because you're ready to do it. But when you're looking at your potential to build equity and net worth, people that start younger are going to have a lot more equity and the ability to then take that out and to have more money to buy the next place.
Yeah. Well, I think that's a good point too, is, if people want to start younger, how do we reverse this trend? We've gone from, when I started in the industry, it was 28. So we've gone from 28 years old as the average first-time buyer to now 40, probably pretty quickly approaching 41 at the rate we're going. How do we reverse that trend? And for me, it's been very interesting. I've had a lot of meetings with 20-something-year-olds recently.
What do
I
they
don't
say?
know why. That's interesting that I've been having those meetings with younger people, but they want to be homeowners. They understand that homeownership is the quickest path to building wealth. And you look at most millionaires in our country, I think the statistic is about 80% of millionaires built their wealth through real estate.
Yeah.
So how do we reverse that trend? I mean, your kids are obviously older than mine. My 6-year-old told me last night, Daddy, when I grow up, I want to have my own house, and you and Mommy can stay with me and still snuggle.
Great.
But like, what conversations are you having with your kids? Because they're more towards that age of being in.
Well, yeah. I mean, my daughter's still in college. She's got a couple more years, but they've grown up in a house that understands real estate, and they know what I do for a living, and they know what's important, and they go to their friends' houses, and I try to tell them, hey, like, you're in your friend's house, like, your parents, their parents bought this house, this is where they grew up, there's memories there. It really depends. There's lots of different things with real estate. Some is just for investment purposes.
Of course.
Some is to house your family and build memories, right? Both are important, but both can also generate a safe place to store equity, to get a tax deduction, and to have potential appreciation, right? I mean, I kind of look at it like, if you started a 401k or retirement account at age 24 versus starting it at age 33 or 34, the compounding interest that you gain, you can never really catch up. And I kind of look at getting into home ownership the same way. If you start at a younger age, as long as everything is right and you're not overextending yourself, you have to qualify, of course, you are really starting to compound that equity at a much earlier age, and you're able to take advantage of that down the road. So, it's got to make sense, but, there are other avenues. There's investment property too, right? It doesn't always have to be where you live. And there's some really cool loan programs actually that
DSCR and
that can help facilitate that. Yeah. So, I mean, just real quick on that, you can buy a piece of property for rental purposes. You're not going to live there. As long as the potential rent you would get from that property covers the carrying costs, which is the mortgage, the insurance, and the real estate taxes, lenders can give you a loan for that property. So even if you're not working, even if you're self-employed and you...
Doesn't matter what your income is, source of income, it's purely about that property.
Yes. And to get a better deal on that, you really should already have owned a home. So we want you to have some previous experience as a homeowner.
Is that a requirement of the loan, or is that
It's a requirement on a lot of the programs, although we just came out with a new one where you do not have to be, you can be a first-time home buyer, even though you're not living in it, because they want a track record. I mean, listen, we're getting someone a loan and we're not even looking at their personal income. Yes, their credit score, and we got to see some assets where the money's coming from, but they don't even have to technically be employed for us to get them a loan. We don't put any income on the application, any income materials. So that's a really cool way for young people to maybe also team up with a buddy and get into the real estate game as a partnership as well.
Yeah, that makes a lot of sense. I mean, you see all the institutionalized investing that's been going on over the last couple of years. This is a great way to get people back into real estate.
Yeah.
Not just hedge funds.
Yeah. I also think, again, with times being a little bit different, I think in general, some of the young folks, again, generalization, they're kind of doing more experienced stuff earlier on. And I feel like when we were coming up, it was I'm going to do this, that, and the other thing, and then I'll go like travel later, and I don't know. I'm just using my eyes. I see the restaurants packed on Tuesday, Wednesday, Thursday.
Yeah.
It's great. I mean, it's great for the local economies, but people are spending their money a lot differently than they did 10, 15, 20 years ago. The airports are full of young people. It's great. I just, that wasn't the way that we did it, and some of it is cool. I'm like, damn, I wish I kind of like did some of that, and not been so like in a rush to like this, that, save, whatever. So there's probably a fine line in between.
Sure.
But there's definitely a difference, I think, between how young people are approaching life than maybe we did when we were coming out of college.
It's like you said, it's more about the experience than that nest egg, the
Right.
savings vehicle, which again, I do see that shifting a little bit. It's been very eye-opening having conversations with some younger people, younger business professionals, and seeing that mindset shift where they are looking to build and experience things in their own way.
Sure.
While building wealth, while building investments, while building their portfolio and their net worth. And I think that's encouraging. We'll see what happens.
Yeah. It's a different time to be kind of in this world right now as a young person, and they have a different things that they're dealing with than we did. Everything with AI and all kinds of things. And I think also the fact that some companies are having the employees go back to work in the office more, because it used to be like, oh, of course I'm buying something because I work there and I have to
Right.
be in the office Monday through Friday, and I'm going to be settling here a little bit. But if you can work from Florida or California or from Europe and your job permits that, I think you maybe don't feel like you have to settle down, right?
Sure.
As much as kind of previous generations. I mean, quick anecdote. I mean, I was thinking about this. We used to have casual Fridays. For people that don't know what that is, that was when you can wear jeans
Right.
on a Friday. But the whole point of casual Friday was that you were in the office. Like, you were in the office and you could wear jeans. And now, like on Fridays and Mondays, there's a lot of companies, generally speaking, where people are not really in the offices as much. And by the way, Casual Friday wasn't like every Friday. It was like
It was once a month.
It was once a month, and it was
Right.
like once every 2 weeks. We're talking about like the 90s and early 2000s now, but like,
Even into the mid-2000s, when I first started in real estate, there was a strict no jeans rule in the office.
yeah.
I went out and I bought a whole new wardrobe. I got all these suits and, would literally go in a suit and tie every
Yeah.
single day.
Yeah.
Except for, Casual Friday, which was the last Friday of every month. I remember my managing broker at the time literally said to us, if you come into the office in jeans, we have a 5-minute rule. If you're here more than 5 minutes, I'm going to ask you to leave and go home and change.
Yeah.
Different time.
Different times indeed.
Now, like, jeans are professional.
I know. Well, that's another thing that affects both of our industries. I mean, it's when you came up and when I came up, we had bustling offices where there was people there all the time, and it's coming back. And even before, 2020, we had bustling offices. But that's something that I
COVID
think
changed everything.
It changed everything.
in both of our industries.
Yeah, it really did. I mean, as good as things were, as far as real estate activity, mortgage rates being low, right? That was a good thing. It really kind of was like a snow, right? What are the snowball,
Snow globe,
thing? Shook it all up, and now we're just kind of like left with the remnants coming down, and we're getting out of it, because with mortgage rates starting to come down a little bit now. I mean, we're basically at the best we've been at in the last 3 years. People are like, okay, well, if I've got a rate in the 2s or 3s and the rates kind of come down to the upper 5s, mid 5s, maybe I'll trade. And we just need some normal activity to happen in the market. It's been constricted, right?
Yeah.
And
it's hard to say where rates are going. I mean, I just saw Fannie put out last week that they think the average rate next year will be like 6.13.
yeah,
Or 6.33.
it's kind of
like
stable
that.
of where it is right now.
It's stable, but it's been stable. I mean, this year it was relatively stable for the bulk of the year.
Yeah, we came down throughout. I mean, we started seeing some movement in August as the economic numbers came out and showed that, inflation was calming down a little bit and that the jobs were shrinking, right? And we don't want to ever root against the U.S. economy, but when we're seeing jobs get less and less and inflation cooling down, that's going to allow mortgage rates to come down. So we saw the rates kind of come down in anticipation of what the Fed did. And the irony is that the mortgage rates today on December 14th are pretty much the same as they were the day before the Fed started cutting in September. They've cut 3 times. And the mortgage rates are the same. So the Fed doesn't control mortgage rates. They set the Fed funds rate, and other things are affected by that, like prime rate. But it's sometimes hard to make that conversation clear to the customers, like, hey, like,
there's a lot of confusion about what the Fed actually does and how it relates to mortgage rates. People don't realize mortgage rates are not at all tied to the Fed funds rate.
Correct.
It's the 10-year Treasury note that really controls it.
Correct. And we've seen that kind of bounce up a little bit even after these cuts. So there's a lot going on. We're definitely in a way better place than we were 6, 9, 12 months ago. And I feel like if we stay in this vicinity, it's going to at least allow some movement. But in order to get more traction, I think we have to come down. But we don't want to come down too fast. It's like anything in life. If all of a sudden the rates slam down to 5, okay, that sounds great on paper, but it's going to create a stampede of buyers that have been waiting on the sidelines, and there's still not a ton of inventory. And so the lines are going to be 25, 30 deep on offers, and it's going to be really hard to get your offer accepted.
Yeah.
Now, it's going to drive prices up. So people that are not selling are like, this is kind of cool, like, let that happen. But that's going to continue to kind of create a market reaction that's not really healthy.
Yeah. Well, I've been saying that for years. I think if rates do come down below 6, that's exactly what we're going to see. That's not going to be fun. It's not going to be fun for us. It's not going to be fun for our clients. Yes, it will open up more inventory.
Sure, people.
But as you open up that inventory, all of those people that are now selling are buyers as well. So you're going to see that stampede effect. I do think you're right. I think we'll probably see prices go up 12, maybe 15, 18% if that happens. That's not a good thing either for affordability.
No, it's not. It's not. So, I mean, while it sounds good on paper, my home price went up, it's got to go up for the right reasons. Because if it's going up artificially, it's not really real.
Right.
And if you wind up selling during that time, great. But again, we want things to be healthier, right?
We want a balanced market. We really do. I've never seen a balanced market in my entire career. Almost 19 years, I have never seen a balanced market.
Yeah.
We've had extreme swings in the market very quickly, too.
Well, especially, one thing that I want to kind of ask you about also is I think part of inventory issues maybe is the boomer generation. Because I feel like maybe, are they staying in their homes longer? Are they doing renovations? They also, their net worth is a lot larger now. Stock market's 3x over the last couple of years. And they want to stay in their homes longer maybe. So do you feel like at some point, maybe as that generation passes, there's going to be at some point like a lot of inventory that comes on. Now that those homes might be a little bit more dated. I don't know. What are your thoughts about maybe?
It's interesting. I don't think those homes are going to be more dated. You are seeing a trend of people staying in their homes. You look at the home healthcare industry. I mean, that industry has just exploded the last couple of years, probably the last decade.
Sure.
Because boomers are aging in place. Yep. They're staying in their homes. They're renovating. Universal design trends was the big it word in home renovations the last couple of years with the roll-in showers. And, all of that. And I don't see that trend changing.
Interesting. Okay.
There's not enough housing. I mean, you don't see the senior housing, and quite honestly, it's expensive. I mean, you're talking the 1% that can afford that.
Sure.
You look at some of these, senior living communities, it's a $500,000 downstroke just to get in, and then your monthly cost is $8,000 to $10,000.
Wow.
Most people can't afford that.
No.
So aging in place is a more cost-effective strategy.
Sure.
I don't see that changing.
Okay.
I don't think all of a sudden we're going to have this massive influx of inventory.
Okay. Yeah. I mean, in other markets like Dallas area market, that there's land, right? And that those markets keep expanding outwards and new communities are being built. Maybe Arizona, right? People keep
the Southwest.
The Southwest. Here it's tough, right?
Ricky and I talked about this on our last podcast, is at least in the Chicagoland market, we can only go west you can't go east. We're not going to all of a sudden start building land in the middle of Lake Michigan.
Correct.
So that's going to be a challenge for us, and that's why, you look at the national housing trends. The coasts always are affected first, right? And then it slowly moves inward. We're not going to have the same set of issues. It is very much a different market in Chicagoland.
Yeah.
I don't see us all of a sudden having a massive influx of builders moving into the area, because if you want to build a home, what are your options? You buy an existing piece of land where there's an existing home, you tear it down and you build, or you move out to areas that aren't as desirable, that aren't as built up, that don't have the restaurants and the services and all of the stuff that we're accustomed to on the North Shore and in the city.
I will say there's one trend that I've seen, and I know you've seen it too, is especially in the North Shore and other areas, but there's an influx of high-end condos being built for people that want to get out of their house and downsize, but still have a home here if they're staying in this area. Have you noticed kind of that?
Yeah, more so apartments though.
Yeah,
high-end
condos.
apartment.
Yeah, and rentals too.
And rentals. I don't see as many condos being built.
Okay.
They're more high-end rentals that at some point will become condos. I think you will see a conversion. I don't know when that's going to happen.
Okay.
My guess is not for a while.
Okay.
So what I'm wondering is, and I'm starting to see hints of this, is businesses want their employees back to work. We know historically when people own homes, they're more loyal to the company that they're working for. So what I'm hoping we'll start to see is that businesses are going to start investing more into their employees and understanding that if they're stuck or if they're committed to a community or to a home, they're going to stay loyal to that company. Are they going to start offering incentives for their employees to buy?
Well,
I would hope so. I hope that happens, but time will tell.
it depends what kind of business it is, and with all the economic uncertainty going on right now, I don't know how all that affects business decisions, but it is, having an affinity program with a company is a great thing. I've done it before in my past, and I think
we have as well.
Have done it as well. So there's all kinds of incentives that we can offer an employer, right, to make home ownership easier to access for their employees, whether it be first-time homebuyer seminars or just any kind of extra attention that that people would need. So those are really good ideas. But yeah, I don't know. There's so many things up in the air right now.
Yeah.
I think companies are just kind of wondering like which way the shoe's going to drop here, and
Sure.
there's a lot to think.
Well,
about.
and there's a lot of private equity investments and, all the family-owned businesses that cared about their employees
Sure.
are kind of shifting, and we'll see how things play out. I mean, it's going to be a very interesting end of the decade.
Yeah.
So,
but I did want to make the point, and I know you would agree with this. Something that's different than a few years ago, 5, 7, 10, 15 years ago, is we're seeing people ask about potentially getting into buying a year, maybe a 2 in advance. Much different than in the past, which I think is actually really good for many reasons.
people are planning again.
They're planning again. And it's never too early to talk to a real estate professional or a mortgage professional. And it used to be the kind of thing, and I'll just say it, like if someone was like, hey, we're a year or two out, we'd be like, oh my God, like really? And now I'm like, well, this is so good that you're doing this, because there's so many things that you can do now to get you ready in better position to buy 6, 12, 9, even 18, 24 months down the road. Some examples of that, we can look at someone's credit report on a soft credit inquiry, not a hard one, and just, if their score can improve 20, 30, 40 points, that might save that person 100, 200, maybe 3, depending upon the loan size, $400 or $500 a month in their payment just by improving their score. So if we have runway to do it, that's great. If someone's self-employed, we want to take a look at their tax returns potentially before they submit it.
Right.
That way we can say, hey, you're taking a lot of deductions, and that's great from a tax perspective, but you're not showing that much income, and that could maybe hurt you on the mortgage. These are things that people should know, right, ahead of time so they can make the right decisions. And as someone who represents these people, you probably want your client to be buttoned up as much as possible. Yeah. Because when it doesn't happen, things can go haywire last minute.
that and people need more of a runway today.
Yeah.
I think you've seen a little bit of easing in qualifications, and there's more programs available now. You can do bank loans,
Sure.
Bank statement loans, and we haven't seen no doc come back, have we? God, please tell me no.
There's actually one lender that we have access to that if you're putting 20% down, you've got a good credit score and some assets, they don't ask really anything. Now you're paying a premium for that, but there really isn't a situation that, can't be managed. But obviously if
People still have to be qualified today.
Yes.
It's not like it was.
That's an outlier. Correct.
In 2006, 2007, where you have a pulse, you're getting a mortgage.
Correct. It is different than that, but the more runway we have, the better the opportunity for the client to get a better deal, because the more documentation we have is the better deal. It's better for the real estate professional that's working with that person. It's better for the potential seller down the road, because that, when a contract gets made, if the deal is shaky, you're screwing the seller, right? You're screwing everybody. It's a domino effect. So all of this stuff matters. So if people just kind of can be a little bit curious and investigate a little bit earlier, they're going to put themselves in a much better position. A lot of times someone might come to us and say, I'm a year down the road, and we have a conversation. In some cases, we actually move their timeline up. Because one thing that we have seen, and I know you can attest to this, is that you almost want to buy when it's a little bit calmer. That's why we're seeing some activity now a little bit earlier in the season. It's almost like pre-spring market, November, December, because you want to buy when things are calm because you have less competition. Now, there might not be as much inventory, but it's worth taking some swings.
But the inventory that's out there, in general, this time of year, the inventory that's out there is motivated inventory.
Correct.
The sellers have a reason why they want to move, and they're not just testing the market.
Correct.
They're not pricing it at, outrageous numbers where, hey, if I can get my price, I'm going to sell. But they are tried and true prices where they know if there's a serious buyer out there, which there are a lot of serious buyers out there today. I mean, we're closing 2 loans next week.
Yep.
There's buyers. There's serious buyers. So that's a good thing this time of year. I think Christmas has always been good for me, though.
Yeah.
I don't know why.
Okay.
I've closed several loans, not on Christmas, but several deals like right around Christmas. Last year, 2 years ago, I had a multiple offer situation on an off-market house on Christmas Eve.
Yeah, that's great. I mean, listen, the timing is different for everybody, and we love activity this time of year because technically it's usually a slower time of year.
Yeah.
So I was going to ask, I know, because we've talked about this a lot, but what does it take to get someone's offer accepted? Because because we've been dealing with people for over a year in some cases, and they're making offers, and we're throwing everything at the wall. It's a lot different, right? So, maybe talk a little bit about what it takes on your side.
I think the key thing that I've seen, and you've probably seen this too, is relationships matter. So, when I talk to another agent, if I have a relationship or I have a connection to that agent, that's going to get my clients to the top of the list. Even if their offer is not the highest offer, it's going to get them to the top of the list. You call every agent when we're doing a deal together. You pick up the phone and call the listing agent on behalf of the buyers.
Yeah.
We were talking about this before we started today.
I go further than that, but yes.
I got a call from another loan officer for one of my listings that we have an offer on. I can't remember the last time I had a call from a loan officer unsolicited.
Crazy, right? Because
it's something you would think everyone would be doing.
Yeah. Well, you try, again, you want to relate. And I'll see if I know the listing agent first, right? And I'll see if we maybe had a deal in the past together. I'll go on LinkedIn and maybe find out, did they go to the same college as me, right? Are they in, are they in the Big Ten, or are they, do I see a 917 number because they're from New York? I'm from New York. I'll throw everything at it.
You figure out a way to relate to them
if I can.
That connection up front.
Hey, it's good. I reviewed the client's documentation. Everything's great. You don't give away anything personal, okay, of course, but there's ways to advocate and make sure that the selling side is comfortable with this offer. Because if there's 3 or 4 different offers going in and you're all at the same sales price, but Justin has a connection, maybe I can put it over the edge. These things kind of matter. So whatever we can do to help put our clients in the best position, but it is not the same. As an anecdote, back in the late 90s when I bought my first place, I think I went on a third showing where like, hey, my family wants to see it, or my girlfriend wants to see it, or my friends, whatever. Like, it wasn't this race. And now you have to basically have your checkbook, like, ready to write the check while you're driving over to see the place.
Right.
It's totally different.
Yeah. Well, and that's why so many deals are falling apart today, too, is because there's that pressure. There's that pressure cooker environment where if I don't make an offer right now, I may not get this place.
Yeah.
But if you make the offer and then you decide it's not the right place, you still have outs.
That's exactly right. And I put that as part of my first coaching call with the client. I'm like, listen, it's going to be quick. It's going to be speedy. This is the way it is. But you have attorney's review period here in Illinois. So you make your offer gets accepted. You have 5, 7, in some cases 10 business days, and it can be extended to have your home inspection.
Right.
And even if the inspection goes great, you can still get out of the deal.
Right.
And so you do have that get out of jail free card. Which is helpful because people want to catch their breath for a minute if they feel like this has been a rushed experience. And unfortunately, I don't see it getting any better.
It's not going to get better. I think if anything, it's going to get worse as rates drop, to what you were alluding to before. I think that's going to become the new norm.
Yeah.
For a while, for a few more years.
Yeah.
But it's very interesting, the mentality shift that we've seen in the market. Sellers are getting greedy. But then when they become buyers, they're getting
the other
even
way.
greedier.
Yeah.
So, it's just interesting, the dynamic and the way that things have balanced out. So,
What, you mean sellers think their house is worth more than it really is?
some sellers, not all. We certainly see those houses that are on the market for, a year in today's market, even in a great market where there's low inventory and high demand. But, it's even more important to have the right team in place today. And I think you and I talk about that all the time. Like, you have to have a lender who's responsive.
Sure.
You have to have a, realtor who's actively out there pursuing properties for you and building relationships and trying to find inventory, because if you just wait to see something that comes on the market, it might be too late.
Right. That's funny because we were talking about this the other day. Like, are you a real estate professional or are you a mortgage professional or whatever your industry is, only when a client needs you, right? Oh, now someone called me and they need a loan. Okay, now I'm a mortgage person. But like when the phone goes down, like, am I, you need to be proactive. You need to be, whatever your message is that you're selling, whatever value that you're giving, it has to be kind of done all the time. And every person you speak to in our industries is a potential client, which is great. We're lucky, actually, right? Everyone we meet, I've picked up a loan 25 years ago. I was on a flight back to New York to see my family, and I sat next to somebody, and I wound up getting her mortgage. And that's just because we used to actually talk to people that we used to sit next to on airplanes, right? As opposed to just like a quick, sometimes you don't even do a nod and smile. Yeah. I've been trying to do the nod and smile just to let them know like I'm a human being, and sometimes it's like they're like that. Well, I'll get the nod and smile back though.
Right.
Yeah.
Yeah, that's interesting. Like we used to do that. We used to talk to people.
That was a commission for me, just because I said hi to somebody on an airplane, and so we should get back to that.
I do go back to that every year. I encourage my team every year to read a book. Have you read Green Zone Selling?
No.
It's a great book. You should read it. We were talking about reading books before. No one reads books anymore. This is the one book that I read every year.
Okay.
And it's all about going after that low-hanging fruit. Having conversations with people, standing in the grocery line and someone starts talking about, the neighbor's house that went up.
Of course.
Or, we're thinking about moving. Like, that's a great opportunity.
So I'll give you one more anecdote. I just reconnected with a old colleague, peer, and also a mentor in some ways. Kevin Rossio. He's actually very big at in commercial real estate, one of the top commercial real estate agents in the city. And I actually met him in the late 90s, 98. We were in a coffee shop. I was with somebody, and I overheard him at the other table. They had the Sunday paper with all the listings, and I overheard them talking about real estate. And I, in my, no fear, like I'm just going to go, I heard them talking about it. I said, well, I'm a mortgage person. I'm going to go over there and say, hey, I hear you talking about real estate. Here's my card. And Kevin goes, I really appreciate you doing that. That was really cool that you did that. But I'm in mortgage. He was at mortgage too at the time. I'm in mortgage and this is my client. But I love that you did that. And, we had that's how I met him. He became a really good friend of mine.
I didn't know he was in the mortgage business.
He was in the mortgage business for many years. And then he did a career shift into commercial real estate around 2009, 2010.
Interesting. So I didn't know that.
Yeah. So you gotta, you don't know what's going to happen if, you don't put yourself out there in the field. Right. And, you also have to be in a good mindset to be able to see opportunities.
For sure. Well, and you can't be pushy either. You have
Correct.
to go and talk to someone and just say, hey, I overheard you talking about real estate.
Yeah.
I'm a real estate agent. Do you have questions? Is there something specific that you're thinking or wondering about? Just be a resource.
Exactly.
We're not in sales. We're in the service business, but we're also there to be a resource for people.
But if you feel like you're good at what you do and you provide value, and I know you do, and I know I do, then it's a crime to not get that out into the community and to not share that with people.
Yeah.
So that's kind of how I like to approach people who are maybe having some troubles about getting their message out, because not only do I, do loans, but I also like coaching and mentoring, and I've had big groups before, and we've got a nice group that we're recruiting to right now as well. And it's really just making sure that if you're good at what you do, don't keep that a secret, right? I mean, don't keep the Porsche in the garage. Take it out once in a while.
Right.
And if you're leading with authenticity and you're providing value, people are going to see that, and they're not going to think it's salesy.
Right. Well, let's talk about value for a second, because especially in your industry, a lot of people look at value and they're like, well, who's got the lowest rates?
Yeah.
And that's where they think the value is. They'll go to an online lender and start shopping because they're advertising the lowest rates, but that's not where you bring value to the table.
No.
The value you bring to the table is way beyond the rate, even though you guys are super competitive with your rates.
Of course. Well, it's funny because the lowest rate's not the best deal.
Right.
The lowest rate's not also potentially the best payment. So the lowest rate might be on a 15-year fix. That's a loan that you pay in 15 years versus 30 years. Well, that payment's a lot higher. That's the lowest rate, though. So do you sure you want the lowest rate? Because that payment's high. The lowest payment might be interest only, but you might not want that, right? So you're only going to be in your home 4 or 5 years. Well, what if I give you a little bit of a higher rate and give you a $6,000, $7,000, $8,000, $9,000 closing cost credit? That's going to make more sense than you taking a little bit of a lower payment and not getting that closing cost credit that I'm giving to you. So you really got to ask questions about what the client's needs are, because if someone's only going to be in the home 2, 3, 4 years, then the lowest rate is not the best deal. You want to take a higher rate and have a credit. So you have to ask questions. You have to educate the clients and make sure they understand what's going on. And, any rate is available that someone wants, but we want to explain to people mortgage rate is important, but if you're going to go with an online lender, especially for a purchase, first of all, a lot of these online lenders will put a below advertised rate, but then their fees will be 3, 4, 5x.
The closing costs are way higher.
And people, if they don't know, they're just seeing the rate. They don't know, I was paying an extra 15 grand for that. Well, that's crazy. That makes no sense to do it. You also have to realize that the online lender people are not tied to the local community. They're not getting warm referrals. They're getting inbound leads. And so, anytime—
And they're selling your information.
They're selling your information, but, anytime you're really removed from the local environment, from the relationships, the attorneys— we have attorneys here. We have, obviously relationships with our local agents. Anytime you're that far removed, you're just not going to care as much. I don't know how you would, right? So the other thing about these people that go this route is that, your earnest money could be at stake here, right? You're putting up 20, 30, 40, 50 grand, and you're trusting that to someone who's just not local and is removed from the situation. So those are the warning signs.
Yeah.
And, thankfully, I work at an organization where there's not a lot of layers of management, and we're actually able to, in some cases, be just as competitive as an online lender in some cases, right? Because,
But it goes back to my point. The value isn't always who's giving me the lowest rate. You bring value to the table with all of the other things that you do. You'll sit and have a conversation with them. You'll counsel and consult with them, as well as the real estate agent. You'll go the extra mile to make the calls. You'll take a call on a weekend. Not saying that you,
It's a really good
you
point.
want to, but
It's a really good point.
you
Yeah.
will.
So there's some deals where, someone's maybe looking at an online lender or someone who's not in this market or someone maybe at a bank where they're not allowed to even call the listing agent. And I'm like, listen, like
What is that all about? Can we go back to that for a second? Why can't a bank call the listing agent? What is it about that? Is it like
I just think there's
they
so
have
much
attorney banker or a client banker relationship and client banker privileges where they can't share information? I mean, that doesn't help anyone.
I think it's just a compliance thing, right? They say something, right? And then they can't back it up.
Right.
That could be an issue. I know some financial planners that work at large organizations, you're not allowed to text them like on their personal phone about any kind of business thing. So like there are certain organizations, but, and those organizations are great, but this is the speed we move. And if there's firewalls and there's bureaucracy, that's not going to match up with everything that we've just discussed about having to move quickly. And you want to, kind of be in an entrepreneurial environment to be able to do that for people. So, yeah, you have to be careful. Listen, there's some places that perform, but it's like if I have to go to an important meeting, I'm not flying Spirit Airlines to get there. Okay, and I don't know if my bags are going to get there. I don't know if there's going to be a fight at the airport. I don't know. I don't know if my plane's going to land on time. And you have to be careful because when you're in these transactions, you do have money at stake. There is earnest money, and you want to make sure you're working with a professional that's going to get your plane landed on time and your bags are going to arrive.
Yeah. Well, it goes back to one of my favorite Warren Buffett quotes: "Price is what you pay, value is what you get."
Yeah.
So you get a lot of value, even if you're paying slightly more for it. Which, again, you guys are super competitive. Someone's not necessarily paying more, but they're getting a lot more value out of the service you're providing.
Yeah, it's funny. You don't go to like a doc, and again, we're not doctors, but you're the doctor of real estate, I'm the doctor of mortgage, but you don't go to a doctor and say, what's your fee, right? But yet somehow like it's just funny. Now I get
Although today maybe you should.
Maybe you do, whatever. Or you don't look at 3 different lawyers for an important case that really is important to you where you're going to
hire whoever's
you're going to be in this home for 10, 15, 20 years. You don't say like, okay, I need like all 3 of your fee sheets. Obviously do your due diligence. If you're warmly recommended and the person has a track record, most likely you're going to get taken care of. But it's just interesting that somehow when it comes down to these matters, all of a sudden things sharpen. And I'm not saying they shouldn't, but, so much energy there is really maybe not the best use of the energy, in my opinion.
Yeah. Well, I think that's a good point. I think there's a lot that people don't look at when they're looking to make this investment. I mean, to your point, you wouldn't go and have heart surgery and, just say, oh, the surgeon said they're going to cut me open and fix my heart. I'm just going to go with them. A lot of people look at that the same way. They're like, I'm not just going to talk to one lender. I'm going to talk to 3. I'm going to get a second and third opinion. But if they're shopping based on price or they're shopping based on the rate, they may not be getting the best service.
Correct.
Same goes with real estate. You can interview 3 different real estate agents. You go to, one person that's going to do it for 1%. They're going to list your house for 1%. And you think they're going to give you the same service, they're going to give you the same value, they're going to be the same quality of negotiator as someone who's doing it at 3% or 3.5%?
Sure.
Probably not. They can't even negotiate their own value. They're going to do it for 1%.
That's a really good point. Yep.
So, I think it's really important to understand. It's more important to understand the value of what you're getting and the quality of service and the relationship that you're getting is sometimes way more important than price.
Yeah. And I'll just circle back on that real quick. I mean, a lot of times my clients and, we are actively trying to look at opportunities to save them more money on a refinance. I mean, the majority of my clients that closed in the last 3 years, as the rates have come down over the last 36 months, some of them I've refinanced twice already. Twice. People that bought in 2023, I refinanced them twice. And so if they went with another lender that maybe was offering them something slightly better, I don't know, whatever, that lender might not have brought them those refi opportunities.
Sure.
And so people have to understand that when they're working with professionals like us, this is a long-term relationship. We're not just doing the transaction and then that's it. And I send you on a boat and send you down the river. We're going to be actively making sure we bring you opportunities because we care about their financial security in this house, and we want to be able to save the money. As a matter of fact, I used this anecdote the other day because I'm mentioning to realtors that I talk, and you know this as well. You know, some of your clients that bought in the last 2 or 3 years, you know, if they haven't refinanced, go ahead and maybe mention that to them. If they weren't satisfied with their original mortgage professional, have them call me or whatever. But imagine if you can go to somebody, sell them a house for $500,000, and then 9 months later tell them I can now sell you the house for $490 or $485. You'd be the best. You'd be unstoppable. But that is what I'm trying to tell people about. I'm like, tell people that they have these opportunities to save money, anyone who's bought in the last 1, 2, 3 years, because we are effectively saving the money on their mortgage, which is kind of like their house being purchased at a lesser price. Does that make sense?
It does make sense. And, you know, I know a lot of people will just focus on the payment, but if you look at the big picture, and I mean, you could talk about this for hours probably. If you look at the big picture, look at how much money you're saved on your interest over the 30 years, that's where you're really saving.
Sure.
So, I mean, someone who's in their house for 2, 3 years probably doesn't make a difference. If they can afford the payment, and this is what we always tell our clients, if you're comfortable with the payment, buy the house.
Sure. The payment can always get better.
The payment can always get better. It's not going to get worse. We're not in Europe. It's not going to go up every 2 years.
Correct.
We don't do, you know, we have fixed rate mortgages, which is something that's unique. I think that goes towards the American dream of homeownership is we have the ability for you to have a stable payment over, you know, an extended period of time. And that gets me to another point that's kind of an issue right now is taxes. You know, the taxes are out of control.
It's a headwind.
I think it's the biggest headwind we have, at least in our market.
Yeah. Taxes and what's going on in the condo market. And condos are fantastic and they're not going away. And for people that don't want to have all the other things that come along with owning a house, with landscaping and maintenance and roof stuff. But, you know, listen, unfortunately what happened in Miami, the building collapsed a couple of years ago, and it makes sense. I mean, the agencies, Fannie and Freddie, swung the pendulum the other way, and they really want to make sure that buildings are healthy. And if there's any critical repairs that are being done in a building, such as a balcony or roof, whatever, you know, foundation, you know, they really want to make sure that stuff is good, because if there's a major issue in the building, even though they're addressing it and fixing it, that building might be harder to get financing on. And these buildings have to do more inspections now to keep up with county and things like that. So not going away, but there's definitely been a little bit more attention on the financial stability and the structural stability of these condo buildings.
Yeah. Yeah, it's making it hard.
Yeah.
There's a lot of headwind out there. There's a lot of changes. There's a lot of good things happening too. You know, rates trending down is a good thing.
Sure.
But, you know, there's challenges. And, you know, I think it's more important than ever for someone to get in front of you, in front of us, earlier in the process to make sure that we can meet those challenges head on.
Absolutely.
So,
yeah, I appreciate this talk. It's been fantastic.
Yeah, absolutely. Yeah. Well, thank you for being here. This is our 3rd episode of Unlocking the Windy City. And if you like what we're talking about, Chicagoland real estate, some national stuff that's happening that's affecting our industry, but just learning about the market and real estate and what's happening. We didn't even really talk about some of the hot spots today about Chicagoland, but there's a lot of important stuff that I think we talked about. So again, I thank you for being here. If you like our podcast, make sure you subscribe, follow us, listen, share with your friends, and we will see you on the next episode.
Thank you.